Well, bad news is it looks like that Russian rocket did not hit Citadel Securities, but this is the face of Ken Griffin, the they won't sell face. We're fucked face, pretty much. Now, we did actually just form a double bottom, which is really the main point of this video, and that's what I really wanted to go over, and we'll go over some other things as well. And people say technicals don't matter, all of that. Fine, I get it. At least the trading algorithms matter. The fractals, all these different, patterns of trading algorithms do matter. Take a look at this. Take a look at what we've seen today. Hopefully you catch it. $20.80 per share was the bottom of this week, December 14th, 2021. Guess what the bottom was today? $20.80 per share. It's almost comical at this point. It's almost comical how easy it is to figure these trading algorithms out. So with that sense, what happened after we hit $20.80 per share? Literally not a penny under that. We started to rip. Trading algorithms started to bid up the stock yet again. And what did they just form, ladies and gentlemen? They just formed a double bottom. You might be asking yourself, is a double bottom bearish? Well, let's look into that right now. Double bottom definition. What is a double bottom? A double bottom, I can't speak English, guys. A double bottom pattern is a technical analysis charting pattern that describes a change in trend and a momentum reversal from prior leading price action. It describes the drop of a stock or index, a rebound, another drop to the same or similar level as the original drop, and finally another rebound. The double bottom looks like the letter W. The twice touch low is considered a support level. So in other words, it's signaling a bullish reversal. Take a look at January when we hit $1.91 per share, rallied up to $20. What happened right here? Double bottom. Actually, this looks like a triple bottom, but definitely a double bottom right here and right here. Now scroll this out. Let's go to June. Let's see what happened before June. Very interesting. Same kind of patterns, right? Bottom right here, and we start to take off. If that's the case, what are we looking like this time around? I guess you guys can answer that down below in the comment section, but we're definitely seeing that same momentum kicking in. Look at that. We're looking beautiful for the day. Ever since we did hit that trading algorithm, started buying the stock. But what else is going on for AMC on the charts? We can see that the inverse head and shoulders pattern does look like it is still formed, in my personal opinion. You may get different thoughts and takes on this from different people, but it still looks like the inverse head and shoulders pattern is definitely still formed. The most important thing, though, I'm going to be watching this 20-day simple moving average in between the Bollinger Bands. And also the $23 price is really the level that I've had marked right here, this blue line that I wanted to stay above. And that's exactly what we're seeing today at $23.43 per share. So looking incredibly bullish right here. This double bottom is very, very exciting. And the way that we retracted so fast, I mean, look at this wick. This is possibly the biggest wick that we have seen in a long time. That is showing you that we went from a very low price to a very high price very fast. And that looks really good. By the end of the day today, I really want to see us close above $23 per share. 30 would be nice, right? And then ultimately make our way back up to $25 per share and then break out past the 20-day simple moving average at $26.93 per share. Some good news is it's coming down a little bit, so it should be easier to break out above that. Considering the max pain is at $26 per share, that would put us very close to this 20-day simple moving average, about $1 off. And it wouldn't surprise me even tomorrow to see a substantial bounce in the right direction. So that's the scoop on that. The MACD is bearish. It just crossed into bearish territory. It's not always going to work as an indicator. It's one of my favorites, but sometimes it doesn't work with AMC. Simple truth. We went bullish on the MACD December 20th, and the stock price just kept going down until ultimately we went bearish on the MACD the 5th. So that was yesterday. Now we're popping back up again, and we're still bearish on the MACD. So take that for what it is. Watch the moving averages, especially the 20-day simple moving average. And for the volume on the day, we're already at 30 million shares that have traded hands. That does suggest to me that we should see a continued follow-through rally throughout the rest of the day today. And this is most certainly trading algorithms that are buying the stock, because after all, we dropped almost 11% yesterday on 45 million for volume. Now we're seeing 30 million for volume. I think the price is still being suppressed by the shorts in some way or the other, though. We're not getting any indication that they are actually covering today. We're looking at 17.55% short interest of free float, 90.09 million shares that are sold short. Cost to borrow is starting to go up a little bit, with the cost to borrow max now at 1.56%. Share utilization is at 76.52%, and the days to cover is at 2.47 days cover. And it's important to know that days to cover in January and in June were very high, and then once the price does start to go up in a substantial way, then you do see the days to cover falling. Days to cover is at a yearly all-time high. It is not, it's higher now than it was in January and in June. It's higher than it was in June by a substantial amount. So that's a ticking time bomb, like I say pretty much all the time. And this is all something to be very excited about. But before we get any further into this video, here's your sponsor for this video. It's myself. If you guys want access to all my trades in real time, we have been killing it over there. Check that out. Here's some of the alerts. Bought a Baba call just for this Friday. This was January 4th for $33 per share. IG Nico sold out for 76 per contract. That was over 100% gain. Bought a Facebook put for $61 yesterday. Sold that put for $71 today. Slight profit, about 15% profit. Bought an AMD put yesterday for $181. Sold out of it today for $192. That was about a 70-80% profit. And then I did buy a Facebook call for $64 today, January 14th, 2022, $355 call. And that thing is up over $120. That's already over a 100% gain. And that could actually go in the money. If we do turn bullish in the markets, that could print some massive tendies, hundreds of dollars possibly. So looking forward to that. If you guys want access to all of that, link down below in the description for the buy and sell alerts. We have definitely been on a bit of a roll. But let's get into this whole bounce situation. What could happen? And this is a big could. It may or may not happen. Tomorrow is going to be Friday. So that is going to be very key and really relates to all of what I'm saying here. So we are seeing calls that are out of the money at 96,431, where we do have in the money calls at just under 5,000. We are seeing in the money puts for tomorrow at about 25,000. Out of the money puts at 18,000. So we have more in the money puts than out of the money puts expiring tomorrow. So essentially, if you've not heard this before, if you see a stock like AMC going up and there's a lot of option activity, puts and calls that are in the money on the put side and that are out the money on the call side, especially on Friday, if the stock price moves up in a substantial way, then you see instant hedging and de-hedging. De-hedging on the put side, which consists of market makers buying stock on the open market, and hedging on the call side, which is calls going from out of the money into the money, which consists of more buying power. So in all, two forms of buying power that can come in a substantial way. And specifically with the low volume that we are seeing, it could make an impact. And if we do take a look at the actual, we'll have to pull it up. Damn it. We'll have to pull up the option chain. We're going to take a look at where these options are. Are they just out of the money? Are they not out of the money? Or not close to going into the money? Let's just take a look. Take a look real quick. We can see that we have a substantial amount of calls that are just close to going into the money. 4,000 at the $24 strike, 8,300 at the $25 strike, 7,000 at the $26 strike, almost 10,000 at the $27 strike, another 8,300 at the 28, and about 11,600 at the 29, and 20,000 contracts at the $30 strike. Could we see a $7 move tomorrow? I wouldn't bet on it. I wouldn't put my hat on it. I wouldn't take my Santa hat off and put it on $30 per share. Hell no. But is it possible? Does it look good right now? Certainly. At the 23, that's where we got the first big boost, and we only had 2,500 for open interest for the $23 strike. So all in all, looking very good. Keep in mind the max pain is going to be $26 per share. That would indicate about a $3 move for tomorrow. So those max pain fans out there should be looking forward to a bullish day tomorrow. So that is going to do it for this video. Hit that like button for me. Consider subscribing to the channel. Let me know what you think about this double bottom pattern that has just formed. Appreciate you guys. Love you. Thank you for watching this video. I will see you in the next one.